This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind.
Hi, this is Joe Rabil with Invest Like a Pro. I'm going to talk about a specific trade setup. I'm going to start with a monthly chart, and then I'm going to go to the weekly, and then I'm going to show how I would have looked to enter on a daily chart, and then how I would have managed position as it went along, where the stop would have gone, where I'd look to take targets. I thought this would have been, I think this is a good idea as a review in certain cases for people that have been around for a while, and others just to see how I look at things in multiple time frames. So let's go ahead and get started. But before I do, make sure you hit the subscribe button if you're not a subscriber, and hit the bell to make sure you get notifications. Let's go ahead and get into the chart. And use a new core, and I've actually got a monthly chart up, as I said. And so what I wanted to explain first of all is there's two different parts to trading. One is being an analyst, and the other side is the trading aspect, the execution side. And I'm kind of a firm believer that they're two separate things. You need to get good at both if you want to be really successful at this. But the skill set of trading is the shorter term time frames and actually understanding where the triggers are, what to look for, how to execute the trade, how to get out of it, how to manage the position, how much to put on. All of that is the trading component. The analytical side is getting a better understanding of all the indicators and trend, and which of the stocks that I should be focused in on. So I've got Nucor up here, and the reason I'm showing you Nucor is because there was a significant improvement in basic material stocks, and not only that, we've seen a significant improvement in the steel stocks. So I wanted to show you what I see when I go through and look at lots and lots of charts. I'm seeing this, and I think it's pretty important to be able to recognize. So if you go and look at this monthly chart, we had this downtrend in place through the bottom in 2020 when the market really got hit. And then we came up and we started to make a really strong move to the upside, and then pulled back and checked back to the 18-month moving average. So we broke, if you see this line right here, we broke the 18-month to the upside and pulled back to it. And the same thing happened with the trend line. We broke the downtrend line, and then we pulled back and sort of checked back to it. So that's really important criteria when I'm looking at whether I want to trade on a weekly chart. I kind of want to see what's going on the monthly. So this supports, this area right in here supports looking for a trade on the weekly chart. Now, I'm going to switch this to a weekly. And if we look at what took place on the weekly chart, we crossed up and pulled back, and look at what the position of the moving averages were at this point. We had a rising 18 above a rising 40 with both lines rising. And so, and if you notice, the ADX was above 25. It pulled back just underneath 25 during this deep decline, but really strong overall condition from an ADX standpoint. So this is the type of stock that I would really be attracted to, looking at steel, starting with the fact that I know the steel stocks are trading really well, looking at the fact that the basic materials have been pretty strong, and I just like the idea of looking for a big change in trend developing on the longer term time frame. So I know I've got that in my back pocket. Now what I want to do is switch this, and I've got the weekly chart on the right now, and I've got the daily chart on the left. Now, the condition that I talk about over and over again, that's from my book, and again, I've done a lot of videos. I use a 2 time frame strategy. On the higher time frame, I'm going to get rid of this line just so you can see a little clearer. On the higher time frame, I'm looking for a pullback to a rising 18 or rising 40, in between or at a rising 18 and a rising 40. I want both lines rising, and then I don't mind if it dips down inside like this and comes actually pretty close to the 40. And if we do that, it meets the criteria on the higher time frame, especially if the ADX had a really strong reading prior to the pullback. So we have the criteria we need on the higher time frame. On the lower time frame, what we're looking for is an opposing trend to this time frame. So we know we're up on this time frame, so we're looking for down on this time frame. And now we've got the 18 below the 40 and price below both of these moving averages. So in essence, this trend is negative and this trend is positive. And the reason I look for that is because what I'm trying to do is I don't want to buy, like if you only look for stocks that are in uptrends and you don't worry about any kind of a counter trend move, you could be buying stocks overbought. And what I want to do is I want to wait for a period where we go through like a declining phase on the lower time frame. And then when it starts to match and all of a sudden we have a new uptrend forming or the start of a trend forming on the lower time frame, it's getting me in on this time frame, normally at a pretty good spot. So that's kind of where we are. And so this is right here on the hard right edge. I'm going to start going bar by bar and just show you what I'm looking for and what's taking place. So right here, the MACD is crossing back above its signal line. And we're getting close to getting back above the 18 and the 40. And as I've said, that is a trigger. If you close above the 40, you could consider that a trigger to get you in on this trend. But let's just evaluate how this took place. If you notice, it moved up from here. So we made a move from here, this bar, another bar here, up, 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 up. We're up about 5 or 6 days in a row. And if I buy on this close after 5 or 6 days in a row to the upside, I've got to put a stop way down here at 47.90 or something like that. Really, really far away from my entry. And so I would be very reluctant to want to do that after a big run up to the upside. So I'd probably look for another one of my patterns. And essentially what I'm trying to do is say, we've just made a move to the upside. Let's look for a pullback and then a move that looks like it's starting to move back to the upside like that. And so if we get that here, we've made the move up. Let's see if we can get a pullback and see how this plays out. So we're going to go bar by bar. And we get a lower high. And then we get another lower high. Well, now I know I've got the pinch play developed because the two lower highs and the MACD line is holding above its signal line. Again, this is from my book. This is one of the patterns from my book. I look for a minor little pause or pullback against the trend when the MACD is crossing back above, especially when it's early inside the range still. So we've got that. So the way I play this is that if you take the high out above, if you take out the high of this bar, then you get long and you put a stop in underneath it. And that's what happened on this next bar. I used a little bit of slippage and I said my entry is 55.15. It's taking out the high of the bar. The high of the bar was 55.07 and I'm saying I got in around 55.15. The stop is 53.70, which is 4 or 5 cents below the low of this bar. The reason why I look at it this way is that we had this really strong move off the upside to the upside after undercutting this bottom, and it's forming sort of an undercut and rally as well. And if that's the case, then we should see immediate follow through in our favor. And if it doesn't, then I'll take a small loss. So again, so I'm in at 55.15 and 53.70 is my stop. So I'm risking $1.45 on this trade. From my entry to my stop. That's the difference between these two numbers. And so R1, or 1R, I should say, is 56.60. And that means that at 56.60, I've now made how much I risked. I risked $1.45, and $1.45 in profit would be 56.60. And so I'm now at 56.34. And on the next bar, I get a gap up and I exit and I take a profit. And what I would do is take a quarter of a profit. So if I bought 1,000 shares, I would take 250 shares and on the open, I would have gotten a little bit better than my target because it gapped. Right around 57, I would have taken 250 shares and taken a profit. On the balance, I'm going to go ahead and go to a break even. I'm going to put the rest of my shares, the 750 shares, I'm going to raise this stop. And let me just move this over a little bit. I'm going to move this up to, let's Close enough. Now my stop is here. Okay, so now at 2R is 58.05. I'm not going to actually do anything on at 2R. And the reason is because I showed you the monthly chart and how I thought this was a big potential trend developing. So even though I'm trading it off the daily chart, I want to give myself a chance to make more money on the monthly time frame and the weekly time frame, because I know overall the pattern looks really good on a bigger picture. So I'm going to wait and wait for 3R to do anything next. And so if we keep going forward at 3R is 59.50. I now get 59.50 hit on this bar. I'm going to take another 250 shares and book the gain. And I'm actually going to leave I'm going to leave the stop at a break even. Now, you have another option. I usually will leave it just at a break even, but because we have now made a higher bottom, I can now put the stop in underneath this low that was made, and it came down, made a low, and then turned back up and went to a new high. So I can put the stop behind that. Another strategy you could use is wait for a clear break of the 18 MA as another way to stop yourself out if this goes down. So you've got a couple different options there. Let me keep this up to date though. So now at 4R and 5R, I'm going to know what those levels are, but I'm not going to do anything because now I know I have taken half of the gain. I have taken half of the shares that I originally bought, and I have booked gains, and I've reduced my risk. Now at a profit on the balance on the 500 shares that are left, I'm actually at a minor profit. And so from that standpoint, I can be a little bit more generous about giving this a little bit more room. Again, you got to realize I'm trying to stay in the trend based on the monthly and the weekly. So if we keep moving forward, we kind of moved around here, but we never reached 6R, because 6R is where I'm looking to take the next profit. And so if we keep moving forward, finally get a pretty nice move that moves up to enough where I can get 6R, and that's my third target. I'm going to take another 250 shares, and then I'm going to actually raise the stop to 59.5, which is 3R. So now I'm taking the balance here and moving it up underneath these bottoms. Works out perfect. Right? Now I know I've locked in 3R on the balance of the shares. Now, when I get to now that I've gotten to 6R, I go to 3R. Now, I'm not going to take any more profits at targets because I've taken 3 targets, and now I just want to trail the stop until I get taken out. And the way I would handle that is at 9R, 68.20, which I haven't hit yet, I would raise the stop to 6R. And I would move the stop up to 63.85. And then if I get to 12R, I don't even have it calculated out, but I would figure out what that is, and I would raise my stop to 9R. And I would just keep raising the stop every 3R until I get stopped out of this trade. This gives you the potential to make a huge amount of money on a trade where you risked 1 bar. We risked 1 bar. Remember, we only risked $1.45 in this trade, and we're giving ourselves the potential to make $10, $15, $20, $30 potentially on the last piece of the trade, the last 250 shares. So this is, I think, a pretty good example of how I would go about handling a trade. You can handle the targets however you want. If you want to be real aggressive and take them at 1, 2, 3, 4 and raise the stop every time, you can do that as well. I would just warn you that if you've got the bigger picture in your behind you, where you've got a monthly and a weekly that look attractive and there's some upside potential, play it something like this where you give yourself a little bit more room. But I think you'll be surprised if you start playing this way and you start thinking this way, how consistent your performance can be. So hope you like this. Please hit the like button if you did, and we'll see you next time.